Want a portfolio that actually grows? Stop buying when everyone else is buying. The trading card market is driven by emotion, but the most successful investors are driven by strategy. Understanding the TCG hype cycle is the ultimate cheat code to building long-term wealth. Let the crowd fight over scraps during release week. Today, we're breaking down how mastering this cycle will transform you from a FOMO-driven consumer into a calculated, profitable collector. While this might seem like a basic concept, it's absolutely critical to review, both as a vital reminder for veterans who have been in the hobby for years and as a foundational rule for those just getting into it. Here is the golden rule. In most cases, the absolute worst time to buy is during the pre-release and launch window of any new set. When a fresh expansion drops, there is a massive surge of buzz and attention. You'll see YouTubers, TCG influencers, and community pages talking non-stop about the newest release. This is by design. People want to know the set list, the top chase cards, and the pull rates. It's how the content machine operates, but it also creates a perfect storm for prices to peak at their absolute highest. It completely makes sense why this happens. There's an overwhelming amount of raw demand, and collectors are desperate to secure the hottest new cards. For many buyers, the actual price tag doesn't even matter. They just want the sheer guarantee of having that shiny new chase card in their collection now. This intense, immediate gratification drives up pre-sale and launch day prices to unsustainable premiums. However, for those of us looking to build a strong, upward trending portfolio, this is the exact time we need to step back. It's much more profitable to be counterculture in this arena and exercise extreme patience. You aren't just any buyer, you're looking at the long term. Your horizon is 5 to 10 years from now, not the frantic days or weeks following a release. By letting the dust settle, you avoid the premium tax that impulsive buyers happily pay. This predictable cycle is most apparent with singles. As mountains of sealed product are ripped open during launch week, the supply of singles skyrockets. This sudden influx of inventory usually brings down demand, as buyers quickly realize how many purchasing options they actually have. The Pokemon TCG has the clearest history of this phenomenon. If you look at standard Pokemon price charts, you'll almost always see a massive jump on the release wave, followed by a long, slow slope downward as supply floods the market. Now, it's important to note that the market isn't a monolith, and there are exceptions to this rule. Take the recent One Piece OP13, carrying on his Will set release, for example. Pre-sales for booster boxes were hovering around $140 to $180. Smart collectors recognize the signs of a massive hype set, specifically with the introduction of new red mangas and other top-tier high-value cards. Those who identified it as a clear winner and bought during pre-sales enjoyed a quick 100% jump within weeks, and that same box tripled in value just a couple of months later. On the flip side, we witnessed the absolute opposite with the Marvel Spider-Man MTG Collector booster debacle. Coming off the high of the 1,000-plus Final Fantasy collector boxes with serialized cards, there was massive blind speculation. Pre-sales were flying at 900+. But as more news and card previews leaked, the reality didn't match the hype. The value of this collector booster was violently cut into a third, leaving pre-sale buyers massively down on their positions, forced to either take a brutal loss or hold heavy bags. Ultimately, understanding this cycle helps you make informed decisions, keeping your portfolio steady and consistent even in turbulent markets. For example, with the current hype surrounding Pokemon's newest set, Ascended Heroes, it's probably the worst time to buy in. Instead, it might be worth taking a look at the previous sets like Phantasmal Flames, which is now old news and is calming down. Similarly, with the recent release of One Piece EB03, right now is a prime time to sift through OP14 or earlier sets to find market overcorrections. While this isn't a bulletproof plan, especially during TCG bull markets where a rising tide lifts all ships, it remains the best rule of thumb to secure deals and completely avoid the dangers of FOMO. For TCG collector tips like this and more, consider subscribing or joining us at tcjournal.io.